Introduction to the Russell 2000 Index. In the ever-evolving landscape of the stock market, investors are constantly seeking opportunities to diversify their portfolios and unlock potential for growth. One such avenue that has garnered significant attention is the Russell 2000 Index, a benchmark that tracks the performance of small-cap companies in the United States. As we embark on this comprehensive guide, we will delve into the intricacies of this index, exploring its history, composition, investment strategies, and the potential rewards and risks associated with small-cap investing. Understanding the Russell 2000 Index. What is the Russell 2000 Index? The Russell 2000 Index is a widely recognized and respected gauge of the small-cap segment of the U.S. equity market. It comprises approximately 2,000 of the smallest publicly traded companies in the United States, encompassing a diverse range of industries and sectors. This index serves as a barometer for the performance of small-cap stocks, providing investors with a comprehensive view of this dynamic market segment. History and background of the Russell 2000 Index. Introduced in 1984 by the Frank Russell Company, now part of FTSE Russell, the Russell 2000 Index was designed to capture the performance of the smallest 2,000 companies in the Russell 3000 Index, which represents approximately 98% of the investable U.S. equity market. Since its inception, the Russell 2000 has become a benchmark for small-cap investing, serving as a reference point for investors, fund managers, and market analysts alike. How is the Russell 2000 Index calculated? The Russell 2000 Index is calculated using a market capitalization-weighted methodology, which means that the larger companies within the index have a greater influence on its overall performance. The index is reconstituted annually in June, ensuring that it remains representative of the small-cap market segment by including companies that meet the size and liquidity criteria, while removing those that have outgrown the small-cap classification. Importance of the Russell 2000 Index in the stock market. The Russell 2000 Index holds significant importance in the stock market for several reasons. Benchmark for small-cap performance. It serves as a widely recognized benchmark for evaluating the performance of small-cap stocks, allowing investors to gauge the overall health and trends of this market segment. Portfolio diversification. By investing in the Russell 2000 Index, investors can gain exposure to a diverse range of small-cap companies, potentially enhancing portfolio diversification and mitigating risk. Investment product development. The popularity of the Russell 2000 Index has led to the creation of various investment products, such as exchange-traded funds, ETFs, and mutual funds, providing investors with convenient access to small-cap investing. Market sentiment indicator. Analysts often monitor the performance of the Russell 2000 Index as an indicator of market sentiment, particularly regarding the risk appetite of investors and the overall economic conditions. Investing in the Russell 2000 Index. Benefits of investing in small-cap stocks. Investing in small-cap stocks, as represented by the Russell 2000 Index, offers several potential benefits. Growth potential. Small-cap companies often have greater room for growth compared to their larger counterparts, as they typically operate in niche markets or in the early stages of their business cycle. Innovation and agility. Small-cap companies tend to be more nimble and adaptable, allowing them to respond quickly to changing market conditions and capitalize on emerging opportunities. Diversification. By investing in small-cap stocks, investors can diversify their portfolios and potentially reduce overall portfolio risk, as small-cap stocks often exhibit lower correlations with large-cap stocks. Potential for outperformance. Historically, small-cap stocks have demonstrated the potential to outperform large-cap stocks over extended periods, although past performance is not a guarantee of future results. Risks associated with investing in the Russell 2000 Index. While investing in the Russell 2000 Index offers potential rewards, it is crucial to understand the associated risks. Volatility. Small-cap stocks tend to be more volatile than their large-cap counterparts, as they are often more sensitive to market fluctuations and economic conditions. Liquidity risk. Some small-cap stocks may have lower trading volumes, which can lead to wider bid-ask spreads and potentially higher transaction costs. Regulatory and compliance risks. Small-cap companies may face greater challenges in adhering to regulatory requirements and maintaining robust corporate governance practices. Limited analyst coverage. Small-cap companies often receive less analyst coverage compared to large-cap companies, which can lead to information asymmetry and potential mispricing. How to invest in the Russell 2000 Index. Investors can gain exposure to the Russell 2000 index through various investment vehicles. Exchange-traded funds, ETFs. ETFs that track the Russell 2000 index provide a convenient and cost-effective way to invest in a basket of small-cap stocks. These ETFs aim to replicate the performance of the index by holding the underlying stocks or a representative sample. Mutual funds. Several mutual funds are designed to track or closely follow the performance of the Russell 2000 index, offering investors the potential for professional management and diversification. Individual stocks. For investors with a higher risk tolerance and a comprehensive understanding of stock selection, investing directly in individual stocks that are components of the Russell 2000 index is an option. Futures and options. More advanced investors may consider trading Russell 2000 index futures and options, which provide exposure to the index's performance without direct ownership of the underlying stocks. Popular Russell 2000 index funds and ETFs. Among the various investment products available, two popular ETFs stand out. iShares Russell 2000 ETF, IWM, launched in 1997. The iShares Russell 2000 ETF is one of the largest and most liquid ETFs tracking the Russell 2000 index. It aims to provide investment results that correspond to the price and yield performance of the index. Vanguard Russell 2000 ETF, VTWO, introduced in 2010. The Vanguard Russell 2000 ETF is a low-cost option for investors seeking exposure to the Russell 2000 index. It employs a representative sampling strategy to track the index's performance. Comparing iShares Russell 2000 ETF and Vanguard Russell 2000 ETF. While both the iShares Russell 2000 ETF and the Vanguard Russell 2000 ETF provide exposure to the same underlying index, there are some notable differences. Investors should consider factors such as expense ratios, tracking error, and replication methods when evaluating which ETF aligns better with their investment objectives and risk tolerance. Russell 2000 Index Performance and Trends. Analyzing the Russell 2000 Index Chart. To gain insights into the performance of the Russell 2000 Index, it is essential to analyze its historical chart. The index chart provides a visual representation of the index's price movements over time, allowing investors to identify trends, patterns, and potential entry and exit points. When analyzing the Russell 2000 Index chart, investors should consider the following factors. 1. Long-term trends. Identify the overall direction of the index, whether it is in an uptrend, downtrend, or range-bound. 2. Support and resistance levels. Identify key support and resistance levels, which can act as potential entry or exit points for trades. 3. Volatility. Assess the degree of volatility in the index, as higher volatility can present both opportunities and risks. 4. Correlation with other indices. Examine the correlation between the Russell 2000 Index and other major indices, such as the S&P 500 or the Dow Jones Industrial Average, to understand potential diversification benefits. 5. Economic and market conditions. Consider the prevailing economic and market conditions, as they can significantly influence the performance of small-cap stocks and the Russell 2000 Index. Notable companies in the Russell 2000 Index. While the Russell 2000 Index comprises approximately 2,000 small-cap companies, some notable names have gained prominence over time. These companies span various industries and sectors, reflecting the diversity of the index. Examples of notable companies currently included in the Russell 2000 Index as of May 2023 include Crocs, Inc. Crocs, a footwear company known for its iconic Crocs clogs. AMC Entertainment Holdings, Inc. AMC, a leading movie theater chain that gained significant attention during the meme stock frenzy. Novavax, Inc. NVAX, a biotechnology company focused on developing vaccines, including one for COVID-19. Shake Shack Inc. Shack, a popular fast casual restaurant chain known for its burgers and shakes. Plug Power Inc. Plug, a company specializing in hydrogen fuel cell systems for the electric mobility and stationary power markets. It's important to note that the composition of the Russell 2000 Index is dynamic, with companies entering and exiting the index based on their market capitalization and other criteria. Russell 2000 Index Futures and Options. In addition to investing in the underlying stocks or ETFs, Investors can also gain exposure to the Russell 2000 index through futures and options contracts. These derivatives instruments allow investors to speculate on the future price movements of the index or hedge against potential risks. Russell 2000 Index Futures. Futures contracts on the Russell 2000 Index are traded on the Chicago Mercantile Exchange, CME. These contracts provide investors with the ability to buy or sell the index at a predetermined price and date in the future. Russell 2000 Index Options. Options on the Russell 2000 Index are also traded on the CME. These options give investors the right, but not the obligation, to buy or sell the index at a specific price, strike price, within a specified time frame. Trading futures and options on the Russell 2000 Index requires a higher level of expertise and risk management skills, as these instruments can be leveraged and carry significant risks. Conclusion and final thoughts on the Russell 2000 Index. The Russell 2000 Index has established itself as a prominent benchmark for small-cap investing, offering investors a gateway to the dynamic and potentially lucrative world of small-cap stocks. By understanding the index's composition, performance, and associated risks, investors can make informed decisions and potentially enhance their portfolio diversification and growth prospects. However, it is crucial to approach small-cap investing with a well-defined strategy and risk management plan. Conducting thorough research, monitoring market conditions, and seeking professional guidance when necessary can help mitigate potential risks and maximize the benefits of investing in the Russell 2000 Index. As the market landscape continues to evolve, the Russell 2000 Index will undoubtedly remain a valuable tool for investors seeking exposure to the small-cap segment of the U.S. equity market. By embracing the power of small-cap investing and leveraging the insights provided in this guide, investors can unlock new opportunities and potentially achieve their financial goals. If you're interested in exploring the world of small-cap investing and the potential opportunities offered by the Russell 2000 Index, consider opening an account with our trusted brokerage firm. Our experienced team of financial advisors can guide you through the process, help you understand the risks and rewards, and develop a tailored investment strategy that aligns with your goals and risk tolerance. Don't miss out on the chance to diversify your portfolio and potentially achieve higher returns. Visit our website or contact us today to get started on your small-cap investing journey.